The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Can anyone other than NVIDIA actually profit from the AI hype train? From a newly revamped Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. We got new digs.
I know. And look what happens. You go away and you come back and everyone just renovates your house. It's like one of those house hunter shows where, you know, they just come in and flip everything while you're gone.
I love this.
Yeah.
I love this. So for me, next time I go away, you'll change it again.
We
It'll be
are
awesome.
going to
All right,
change it. It's going to be great, Alex.
To the closing bell right here in the U.S. in our brand new studio. Let's take a look here on where markets are. It's not just about Apple. It's not just about NVIDIA. And I say that because you know what? It's actually kind of about utilities. The S&P is not doing that much, up by about 0.1%, but it's PG&E that's doing quite well. S&P Utilities really leading any move to the upside within the S&P. That got an upgrade. In other news, I do want to focus on what's happening in Europe. We'll talk about this in just a moment. Euro dollar weaker on the day, around a 1-month low after some elections in France will be happening in the next few weeks. And the 10-year a little bit softer, yield up by 3 basis points. We had a 3-year that didn't go very well. But really, Romaine, the rally is today broadening out just a bit.
Yeah, we're going to get to all of those points in just a second here, but there is going to be a big focus today on big tech. Really, because on the back, we're getting that NVIDIA stock split today taking effect. And then, of course, Apple unleashing its salvo in the artificial intelligence race. A salvo, we should point out, that fell a bit flat with investors who had to wait more than an hour for Tim Cook to finally show his cards.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Now, it really was important for Apple to make a big splash in this space, not just for its own sake, but really for the sake of the broader tech trade, which still remains narrowly focused on chip makers like NVIDIA. NVIDIA, of course, a stock priced at 40 times projected profits over 12 months. That's almost double that for the S&P as a whole. In fact, more than half of this year's rally right now attributable to 4 of the 5 biggest stocks in that index, and that can't continue forever. There are signs, though, as Alex was alluding to, that a rotation is afoot. Bank of America saying its clients pulled almost $2.2 billion from tech stocks during the week ended May 31st, second most in the bank's data going back to 2008. That doesn't mean everyone, though, is over big tech and AI, but investors, they clearly want to see if anyone, Alex, other than NVIDIA, can actually profit from this hype train.
Yeah, and you wonder if that's kind of what's happening to Apple today. So let's circle back to that first story that Romaine was talking about, what's going on with Apple. This is the beautiful chart over the last year. You could at least seen a really strong run up ever since that low in April. It's up by about 18% since then. It is right around a 52-week high, but you can see right here, that is a buy the rumor, sell the news situation. You have Apple down by nearly 4% after that announcement. And the question really is it because investors were disappointed with any of the hype? Is it because they talked about AI late in the game and they didn't weave it throughout the full 2 hours? Or was it just a buy the rumor, sell the news? And let's give Apple a little bit of credit for moving on in the AI race, Romaine.
Yeah, they did move on in the AI race, and we do want to kick off today's countdown to the close live from Apple's Worldwide Developers Conference, where Bloomberg's very own Jackie Davalos is standing by outside of the headquarters there in Cupertino, California here. And I guess the big announcement, Jackie, the big redhead on the terminal was that partnership with OpenAI. We knew that was coming. They made the announcement. Do we get any more details as to how ChatGPT will be integrated into Apple's products?
We did. We learned that ChatGPT will play an integral role in how we're able to interact with the things that are already on our iPhones. They gave some interesting examples, like being able to compose a bedtime story for your kids, or being able to, transcribe certain things in your audio to your notes. You can also create new emojis called Genmojis, but OpenAI will really show up in Siri's ability to pull up information that's sitting in your phone that takes a few clicks to get to as it currently stands. Apple said that users will, of course, be asked before any information is shared with OpenAI. This is very key, Romaine, because privacy is really at the core of Apple's ethos. This is what they're known for. They noted that these language models, including ChatGPTs, will be able to run on the device, but also will pull from the cloud, something that it has typically treaded very lightly in doing. And so here you have, it's somewhat, if you look at shares, it's somewhat fell flat. We were expecting some more than the features that Mark Gurman had already reported, but still, it offered users just some new, fresh features to work with when it comes to generative AI.
Hey, Jackie, it didn't seem, though, that the Siri features would be available soon. Can you walk us through what we might know about a timeline?
Well, we do know that the AI features as part of Apple Intelligence, this new AI system that it announced, will be part of the latest operating system, which will be rolled out widely this fall. Now, when it comes to Siri, it called this the new era for Siri. That, what we will be seeing in the short term is actually somewhat limited. When we think about the Siri that we interact with today, it doesn't always catch what we're saying. So Apple promised that in the short term, we'll be able to see better speech recognition, but in the longer term, it's going to be able to pull data from certain apps. It will be able to work those apps on your behalf. So all you have to do is interact with it just with your voice. We're not going to be seeing that anytime soon, but over the course of the year is when we expect to see that unfold.
When we hear all this talk here, Jackie, about pulling this data, watching what you're doing on the phone, listening in on what you're doing as well, I know that's what makes AI tick or what makes ChatGPT tick, but did Tim Cook or some of his other deputies there, did they talk about the privacy issues and how they're going to address them?
Absolutely. When we think about what it takes to run these models, a lot of that just cannot be done on a device solely. Apple made it clear that this approach will be split between what can occur on a device and also what can occur on the cloud. It wants users to feel assured that its data is not going to be going to a cloud where it has no control of it. Apple does not pull from that data. It's not storing your data, but it's still able to run those powerful large language models. Now, when it comes to other privacy features, you can now, with this new operating system, be able to lock certain apps or even hide them. If you don't want someone, if your kid grabs your phone and you don't want them to look at a certain app that you have on there, you can hide that as well. So, of course, these will be part of the new operating system rolling out this fall more broadly.
Jackie, great stuff. Really appreciate it. My daughter's super into that emoji thing. Jackie Davalos joins us from Bloomberg. I just get more on the stock impact. As I was mentioning, that stock much lower on the day. Here is Bloomberg Intelligence Senior Technology Analyst Anurag Rana joining us from Chicago. Anurag, what's up with the stock? Why is it down?
Yeah, I think you mentioned that. It's been, the hype that's been going on for the last, I would say, a few months. I mean, it's just the announcement, I think, almost all the features that we saw today, Mark Gurman over the last few months has announced most of them or talked about it. So I didn't see there was anything there that I would say didn't know that it was going to come out. I did see some of the, the way it's going to be used or practical use cases of that. So I would say is no new surprises. That's probably why it's down a little bit.
There's been a lot of talk here, Anurag, about how this gets integrated into the various Apple products and more importantly, whether that is going to be enticement enough for folks to refresh, whether it's their phones, their iPads, or their Macs. Do you see that potential in the short term for that to happen?
No, I do think it can happen. The only reason is because these features would only be at this point, in our calculations, would be less than 5% of the entire Apple or iPhone install base at this point. So you really need a brand new phone with a faster processor to have these features run. We think the first adopters of that would be Gen Z because, older people might not care about a lot of these, fun features that are coming through. But at the same time, our calculations show that over 40% of the iPhones are iPhone 12 and older. I mean, that's really old, frankly speaking. So I think Apple's looking for any catalyst for that iPhone revenue to go up. And it's possible, not this year, because, this year will end for them in September. But next year, it could give it a boost.
I know someone who has an iPhone 11, Romain. Just putting that out there.
Really?
Yeah, and it still works, which is also kind of weird.
My condolences.
Google and Alphabet is also up by about 0.3% with that partnership. What are the other sort of knock-on positive effects for other companies around this?
See, one of the things that's going to happen because of this if the adoption rate for some of these AI features go up, I mean, you have to remember, when people use more of these features, they're going to go to the apps that already has it. So it will help in the mass adoption of some of these technologies. You have to remember that Apple has an iPhone install base without a cellular connection, people with Wi-Fi also, of over 1 billion devices. That's a very big number. So if you have these people who have the money to spend on apps, on games and other areas, if they use AI a lot more, it's helpful for the entire ecosystem and not just for a handful of companies.
All right, Anurag, I'm going to ask you the question that's on the minds of every Android user out there here. I looked at all the announcement out of Apple today, and if you believe the Android disciples, they'll tell you that most of these features are already available to some extent on Android devices. Why should this somehow sway, if at all, any of those people to move to Apple?
Well, they don't have to move to Apple, frankly. I mean, this is a case of everybody benefiting in the end. Because remember, this is a developers conference where developers will be using some of these features to embed them in the current app that they have. Right now, they already talked about asking Siri to do things that are on the phone. But imagine if you ask Siri to, open a garage, to take care of certain other things in the house, integrating with the third-party apps that are out there. This is just a step in the right direction, because remember, Apple's been behind in this particular ecosystem or in this particular race at this point. So I think everybody benefits, not just Apple or Google.
All right, Anurag, really appreciate it. Thank you so very much, Anurag Rana of Bloomberg Intelligence. So who's going to buy a phone that has AI? Well, UBS found that interest in an AI phone is actually muted. A recent survey expects iPhone purchase interest to remain soft, with the analysts saying that outside of China, Gen AI interest is lukewarm, with just 27% of respondents indicated they are interested in a smartphone with Gen AI, while 28% noting they're not interested, with the balance indifferent. Joining us now to talk about the state of innovation at the company is Apple co-founder Steve Wozniak. Steve, it's always a pleasure to talk to you. We know you hustled to get there. Thank you so very much. What do you think it's going to take for people to just really go out there and pay a lot of money for AI phones? What kind of innovation do you want to see?
Well, I'm more just a user. I come to these events, or I watch them, and when they're all over, the WWDC conferences are my favorite. They're not introducing hardware. They're making software, which is the changes in how we live and how we work. And there's so many items that went by today. It is so difficult to say, oh, I'm an expert on them when I'm not operationally involved anyway. I'm very interested in the Apple intelligence, though, taking your bits of data, not bits of data from around the world out there on the web or anything, and trying to make better sense of what you're doing with your product. The trouble is, a demo always looks good, and I believe in try it yourself, see how it works for you, and then give a real opinion of it. But some major steps were demonstrated today.
So you were impressed, safe to say?
Pardon?
So you were impressed, safe to say?
Oh, well, no. Impressed with what was all different softwares, versions of the operating system and changes in AI. I was impressed with the demos. I always am. But I still believe strongly you should try it and find out after it's over, what works, what doesn't, what didn't come through the way you expected it to. Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. But all the demos today were pretty much, you had a choice to circle some little area and let it go and do its magical wonders, or rewrite something, and you chose to do it, what it was supposed to do. And that means you're looking at the result and determining as a human, how does that make it work? So this is one more type of AI, Apple Intelligence. I have AI myself.
Yeah.
Actual intelligence.
Okay. All right. Well, we're going to patent that one here. So how does your actual intelligence then fold in with the technology here? Because once the developers sort of really sink their teeth into this and we start to see this roll out, what do you really sort of envision as being the practical application? And not just for the tech geeks out there, but for maybe some of those folks who maybe aren't as tech savvy, but have seen all this hype around AI over the past couple of years and want to know how they can use it or how it's going to factor into their life.
Sure. Well, in using my products, mainly iPhones, but I also use Androids, it's like I want to say something. I know the information is in here, and I may have to go search for a certain picture or this and that, have to do a lot of stuff manually, and it sure makes it seem like a lot of that's going to happen automatically, exactly what you want. When you often ask Siri to do something, if it's a very simple statement, Siri knows how to do it, good. If you ask something that any human being would understand, but slightly complicated, one extra word, Siri sometimes has trouble with it, so I'm hoping to see that finally improve, because I like using Siri an awful lot.
Do you think,
so I want to see a big improvement.
Well, I mean, there's been a lot of talk here, Steve, about kind of the innovation that Apple has had, or the perception that maybe they haven't been innovative enough over the last few years. I mean, when we talk about AI, particularly in the context of Siri, I mean, Siri's been around for a long time now. I mean, this was supposed to be the chatbot, the AI assistant, if you will, even though it wasn't necessarily called that. So is Apple still behind the curve, or do you think they've either caught up or maybe even have the potential to surpass some of their peers?
Well, a lot of people, myself, talk about times that Siri doesn't live up to like the original dream. It was going to be the Knowledge Navigator. That was based on an ad that Apple did a long time ago with John Sculley. And the Knowledge Navigator was, it could just have conversations, could understand everything about you and notify of all the things that were on your schedule coming up today and what to be worried about and how long it's going to take and what you should buy and wear, and you should get a birthday cake for your son, some birthday's coming. That's what was demonstrated with Apple Intelligence today. So I'm hoping that really takes a fruitful big step. There were so many things I saw today that said, oh my gosh, if that works, that's going to save me a lot of time just trying to get my own things done, communicate with my friends or whatever, write emails, write texts. I love that. And I loved it, the handwriting correction. Some of these things go back to 20 years ago or whatever. The Newton message pad, had a lot of this stuff, automatic calculations for you and correcting your handwriting. So I love those things. I want to see it as a part of the system, not you have to buy a third-party app to get there.
All right, Steve, we really appreciate it. Thank you so much for joining us. Steve Wozniak, Apple co-founder. We all know, Romain, that I could use that spelling thing.
Yeah.
I'm not the best typist. All right, well, the biggest headline, of course, out of the WWDC was Tim Cook talking about artificial intelligence.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Here in the studio with more is Sam Palmisano. He's former CEO of IBM. He is also currently the board chair of America's Frontier Fund, a nonprofit developed to support critical tech to ensure U.S. competitiveness. Sam, it's so great to get you on set. You're our first guest on set for the new show.
I'm honored. Thank you so much.
We're going to get you a hat or a T-shirt.
I need something.
Okay, perfect. We're going to
Can you make my hair a little darker?
We're going to work.
Can you shoot me?
Someone can.
Yeah, right.
Okay, so let's take a broader view then when it comes to AI. How does the U.S. take the appropriate amount of risk to make sure that it can stay ahead?
Oh, that's a great question, quite honestly. And I'll step back and say, look at the models today and why we created the American Frontier Fund. The models today are heavily oriented around software. You heard that today with the Apple announcements. To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research. U.S. is far ahead in science and research, but we're losing track on commercialization that builds the new technologies, that changes the future, not just consumer convenience. I mean, how healthcare is done, how banking or financial systems are run, how the national security, national defense occurs. All those types of things require much longer cycles of investment, and that's why we created this thing called the American Frontier Fund. We want to keep the West ahead of the East.
So we have the CHIPS Act, right?
Yes.
We clearly have big tech innovating like crazy. Where are we falling short? Like, where do you think the money and the talent and the time needs to go into?
Well, that's a great question, because obviously the issue...
You keep telling me that.
Well, okay, then I'll tell you it's a bad... Well, that's an okay question. I'll ask Roman for a good question. No, but seriously, what it is that the point that the cycles that we're talking about for these very advanced applications require, I'll say, let's say 10 to 15 years. We call it the valley of death. To take it from science and research through the valley of death, to get it to commercialization takes a long time. So to do that, you have to create a partnerships or an ecosystem with the research laboratories, with the academic institutions, with the private sector as well, and you need government involved because of the risk associated of getting through the valley of death. And that's what we are about, and what we've created is a new model for commercialization of this tech, that it's required to keep the U.S. ahead of the rest of the world, but also the funding models that make it attractive for private investment to come in to these opportunities.
But do we have that right now? I mean, when you look at sort of all the movement we've seen in AI as of lately, so much of it seems to be driven by the private sector. And even when the government got involved, who did they turn to first? They said basically they brought the private sector in and said, give us a solution to regulating this, which I think caused everyone to kind of scratch their heads.
Well, there are two different questions.
Yeah.
Regulation's different than actually the creation of the tech.
Yeah.
And the creation of the tech, the reason why, go back to the early days of InQtel, the CEO of the organization is Gil Luria, who created InQtel. That was for national security and defense. But it was the same sorts of things of what could you do long term in technology to make the country more secure. And sometimes you need government's involvement because of the risk factors. No different than the CHIPS Act as far as you're talking about billions of dollars to create these facilities, which are necessary that we control the resilience of the supply chain. But who's going to take the risk of 40 or 50 billion in the private sector? I mean, Intel might invest 20 billion, but you're doubling it up now for these kinds of technologies going into the future. So this is why we've come up with this model that says, okay, we're going to collaborate in the science with the national laboratories and everybody else. And then when you have commercialization, we'll take it to the private sector. But where there's high risk involved, we're going to try to seek, which we've done in our first fund. There's government involvement, there's private sector involvement as well, that combined are going to create the first fund we're about to announce in 2 or 3 weeks.
Are there parallels between what you're trying to do and what we're seeing now, and maybe what we saw coming out of the 60s, 70s with some of the Defense Department projects and some of the science-based projects that were government-based that eventually created the foundations for what really is our tech industry today?
You go through a DARPA, right, is the in there.
Yeah.
I mean, you go through those initial, I'm so old, I was involved with these things. So, I mean, so I can take you through the history of how it was done. But fundamentally, it's those kinds of core technologies. Did you ever think of when you were exchanging technical documents, it would lead to what you do today on your Apple phone, which you just heard about? No, of course not. Now, this is like, 30, 40 years later, but nonetheless, it's the same sort of thing here. But a lot of this stuff does originate, quite honestly, in the science organizations, within the government, and the academic research organizations. But you still need the private sector to commercialize. Not just the fund, but also to commercialize, because the talent and the skills that are required to build these companies don't exist in government. In fact, I would never let government do it if I had an opinion on that subject, because that's not what they do. So we created these things we call road-weather laboratories that actually will take what I'm talking about and drive the commercialization phase.
So to that point, I've been wondering what the cycle, I don't know what to call it, like the cycle of AI or the cycle of AI chips. Like what does that look like? Is it short? Is it long? How does that affect the private money coming in?
Well, I'll give you a sense. Historically, that's technology cycle, if I take you back 50 years, was 15 to 20 years. Wow. So go back to the mainframe to the client-server PC to cloud. They were 15 to 20 year cycles. They started slower. Televisions, phones, all started slower. Today, with generative AI, it is like on steroids relative to the pace of it. However, a lot of people argue that it's at the peak. Even there's research out there that says we're peaking in the cycle. So then what happens next? And you hear it in the enterprise talking about we can't use this stuff, it hallucinates. That's an indication that this thing is peaking, and maybe it's okay for music and poetry or marketing material, but you're not going to go defend the United States infrastructure with that kind of technology, or you're not going to have a bank and not deal with fraud or cyber with that kind of technology. So my point being is this is where we are, but it's going really, really fast. Now the key, and we believe the key for it to really be adopted in enterprise, is basically you have to deal with, we would call them guardrails versus regulations, Roman. We would argue that, and we do argue this, that the right source for the regulation is not the tech industry itself. Because there are leaders in the tech industry, and they're going to show up with an opinion, which is a valid opinion, but also it serves the hyperscalers. we would say that what you really need to do, who the users of the technology are, to take the businesses, the CEOs of these companies in healthcare, banking, government, whatever it happens to be, and let them come up with, let them innovate on the technology, but regulate the use cases, the application, regulate the use of the data, regulate the privacy, establish the guardrails so that people are protected and their privacy and their data is protected, both the consumer as well as the enterprise. That should be done by the enterprises. Look, I was in the tech industry for 40 years, not by me or my counterparts.
All right, Sam, great conversation. I really appreciate you being here today. Sam Palmisano, former CEO over at IBM, and of course, now helping to shepherd that effort of that public-private partnership to further our technological advancement here in the U.S. We do want to take a look here at our top calls as we continue to count you down to the close. Here are some of the big movers on the back of analyst recommendations today, and that includes Krispy Kreme, an upgrade over at Truist to buy, with the analysts there saying Americans love their donuts way too much to give them up forever. Says that negative impact from GLP weight loss drugs, that's already been priced in. And he sees the potential for several years of growth given that partnership with McDonald's. Shares up 5.5%. Next up, let's take a look at Walmart, an upgrade over at JP Morgan to overweight, with the analysts excited about Walmart's strong balance of defense and offense in face of inflation-battered shoppers who have an uncertain path ahead. Shares of Walmart today up about 1.5%. And finally, Advanced Micro Devices, a cut to equal weight over at Morgan Stanley, on the notion that investors may be too optimistic about the chip maker's AI business. The analyst says AMD is more expensive compared to NVIDIA and Broadcom, which are more likely to see upward revisions in the AI space. Those shares down 4% on the day. And those are some of our top calls. Now, we do want to continue in the AI space and in the tech space and in the Apple space as well, as those shares also falling here as the optimism around its AI offering coming up just a little bit short, at least here on this day. As we try to size up the AI race going forward and all the challenges up ahead, who better to talk to than Jana Eggers, CEO of the AI company Nara Logistics and a pioneer in this space. And I don't know how much you heard of our interview that we just had there with Palmisano. This idea here about how fast we're going and all the players involved, Jana. You've been covering this. You know more than anyone just exactly the pace that we're at here. Is that pace healthy, particularly when you consider how much these companies are just throwing everything at the wall and just hoping that, I guess, investors and, for that matter, consumers actually buy into it?
I think it is because the consumer's getting involved. And that's what I'm most excited about is, there's been a lot of us who've been working in AI for a long time. And it's great now to see other people using it and seeing what some of the challenges are, and people calling it out and people being unable to really understand what that means is because people are actually using it now. So I think that's great. I'd say, some of the developers at Apple have been a little bit surprised that features and functionality that they developed is going out so soon in a little bit of an un-Apple-like way. And I think that's good. That means they're going to iterate more and a bit faster, which I think is going to end up helping the consumer and all of us in the long run.
Jana, I want you to take a listen here to what we heard from Apple's software engineering chief, Craig Federighi, about this issue of privacy and AI. Take a listen.
You should not have to hand over all the details of your life to be warehoused and analyzed in someone's AI cloud. With Apple Intelligence, powerful intelligence goes hand in hand with powerful privacy.
One of the biggest concerns about AI is just how much you have to keep that door open to make it work. The idea that everyone's collecting our data, everybody's listening to it. Apple, at least on the surface, seems like they're saying, look, we're not going to put this out into the ether. This is going to be stored on your device, or at least on Apple's servers to some extent. Does that make the privacy proposition more palatable?
I think it's interesting. You'll notice what they said about Siri and OpenAI and ChatGPT, that they said they're going to ask your permission to go ahead and forward it. So I think some of the things, yes, there is going to be more onboard processing, and they'll be doing more that is on the device. But I'd be a little bit careful and balance that out with things that they're doing with other partners, like with OpenAI, where they are going to send it. Although they will notify you of it, that's still not going to be processed on board yet.
All right, Jana, going to have to leave it there. We're tight on time. Always appreciate you taking time for us. Jana Eggers, the CEO there of Nara Logics. A closer look here at some of the concerns about AI. I don't know if you saw this, Alex, but Windows had this whole recall thing that's going to be part of Copilot on these new PCs that have yet to come out. And everyone freaked out because basically Microsoft admitted that the only way Windows recall can work is if it monitors every single thing you do on your computer. So there's a trust factor involved here that they're going to store that data and, more importantly, protect it.
I mean, I'd like to monitor everything that my daughter does on her computer
That'd
and her phone,
too. Yeah,
right? Let's do that, but don't do mine.
Yeah.
That doesn't feel right.
Yeah, I know, but that's the whole issue, right? Like, how do we get to that?
Yes.
Yeah, I don't know. Maybe Apple will try to figure it out. Maybe they don't here. We got a lot coming up here on this newly revamped show. I don't know how much you've had a chance to sort of walk around the studio. Still got the new car smell. I don't know if you've tasted it as well. It tastes like muffins.
No.
Yeah.
It tastes like muffins?
Yeah.
The floor tastes like muffins?
Yeah, chocolate chip
cool.
muffins.
That's
Yeah.
weird. I know I haven't had a lot of time on here, but it's really great. It's also nice to be closer to you in this environment versus so far away.
This is going to bring us together.
It will bring us together, and
Yeah.
we also have a great lineup of guests for you. Just take a look at there. We have Bill Gross. We also have the CEO. You have the CEO of Sotheby's coming up, right?
Yeah.
You also have, I can't read
And Stacy Spikes over at MoviePass. He was one of the founders of MoviePass, got kind of forced out, and now he's back. There's a big documentary about this, and Olaolu Aganga over at Mercer also going to be joining us as well. A huge lineup today.
Better eyesight than me. You definitely went on that point.
Yeah, that's called memory, Alex.
Yeah.
I couldn't read that
well,
either. I
that's
think my
true.
eyesight's way worse than yours.
Fair enough. Okay, in the markets here, you're looking at S&P up by 0.3%. You got the Nasdaq, though, outperforming up by 0.4%, and the Dow relatively flat on the day as well. You also have some selling in the bond market, particularly on the back end of the bond market on this Monday. It is a very big week of economic news, and just a few of the highlights include that CPI report, the latest Fed decision on Wednesday. We're also going to keep an eye on producer prices and jobless claims on Thursday. Let's get some insight on what it all means for the bond market. Joining us is the bond king himself, Bill Gross, co-founder of PIMCO. Bill, it's our launch day. It's our first show on the new set. We relaunched. We super appreciate it. Joining us on launch day, Bill. Thank you so much.
You're welcome. Good to be here.
All right, what's the trade into the Fed on Wednesday? What do you think?
Well, I don't think there's much of a trade on treasuries. To my way of thinking, the 10-year, which is close to 4.5%, let's call it 4.5%, is dependent upon inflation, which we'll see on Wednesday, and we'll know more because of that. But if inflation is 2%, I think the 10-year belongs close to 4%. If it's 3%, it belongs closer to 5%, and we're right in the middle. So at the moment, with 4.5% 10-year treasuries and break-evens at around 220, that's a 470 basically break-even for the nominal 10-year treasury, and I think we're about there. There's not much to be done until we know more.
Bill, what are the chances that we see, say, the median dot in 2024 and 2025 actually move higher? I mean, do you think there's a possibility, and what would be the reaction to something like that?
Well, I think it would be negative. The Fed has basically signaled they're sort of done, perhaps 95% done in terms of raising rates. It's not that they can't raise them if the print on CPI isn't bad for the next several months, but I think the market basically anticipates the Fed to stay, and maybe in September, maybe in December, maybe one or two cuts if the current numbers continue as we've seen them.
I am curious, Bill, when we talk about all the moves that we've been seeing in the bond market as of late, particularly in treasuries, as people try to sort of game what the Fed does next, is there still a strong correlation between what we're seeing there and what we're seeing in the equity market, or is that kind of splintered?
Yeah, I don't think it exists anymore. I mean, for years, I've followed the correlation between the two, between real interest rates and stock prices, between the Fed funds rate and stock prices. And, as we've seen, the Fed raised their short-term rates over the past year and a half or two from close to 0 to now 5 3/8, and the stock market basically has neglected all of that in terms of the rise in not only nominal but real interest rates. So, the correlation is broke down. It's more of a momentum type of market. Actually, it's a very momentum-driven market with AI that you've just talked about. And so I wouldn't be so keen, I guess, on correlating stock prices to interest rates at the moment, at least.
When you look at valuations around here, and I know you can sort of look at this market, either you could go the traditional bottom-up valuation method or just, I guess, look at the technicals and ride the momentum. But when you look at valuations and all the arguments right now that this market might be overvalued, things might be overpriced here, do you find, I guess, credence to that?
Oh, I think so. I mean, it depends upon which multiple, which PE multiple you use, whether it's the 10-year CAPE, as they call it, or whether it's the immediate expectation for the next 12 months. In any case, it's historically high or close to historically high at 21, 22 times for a PE. And so to my way of thinking, if the economy slows, and I think it's slowing, we don't need a recession, but if the economy slows and earnings growth fails to meet expectations, I think there's a problem in terms of valuation at the moment for many stocks.
Many stocks. Well, does that mean, like right now, based on at least what we know publicly, would you be comfortable taking a broad market position right now in U.S. equities?
No, but I'd be comfortable in taking a specific, bet and investment in certain areas which are still very attractive. I know that's the standard explanation that investors basically say, but I think there's some areas in the market that are very attractive based upon a slowing economy and based upon high valuations in many stocks.
Where, Bill?
S&P
Where?
And the NASDAQ. Well, let's talk about a few. I've owned for a long time and have recommended for a long time master limited partnerships for pipelines. These are stocks, these are partnerships, and because of that, they can't be bought by basically by the market, by mutual funds, and so it's a narrow universe. These are stocks like Energy Transfer, ET is a symbol, like MPLX, Marathon Pipeline, which is the symbol there. They yield between 8 and 8.5%. And there's one that I love, I actually love, WES Western Pipeline yields about 9.5%. These yields are basically utility yields. They're take-or-pay type of contracts. They defer, because they're partnerships, they defer taxes on their dividends. And so it's a huge, it's a huge attraction to me in terms of yield and potential price appreciation, and they're all close to the top of their 12-month highs.
Along the same lines, you mentioned utilities. Utilities continue to sort of outperform, and a large part of that are their power players like Vistra or Constellation Energy, and that's definitely related to the AI play. Do you buy into that kind of hype?
Yeah, I think so. I own some NEE, which is the Next Energy, and I think there's a correlation there between interest rates and between the price of the stock. So I think in certain areas, I think utilities as a whole have sort of been overblown in terms of their move relative to AI, artificial intelligence, and the fact that they use more energy. But there are certain stocks there. NEE is one of them that I like.
What about banks right now, Bill? There's been a lot of talk here about financials and this idea that quite a few of them might actually sort of have been kind of valued, maybe not appropriately. The idea that there's a little bit more juice left in some of those names. Do you find any real value there, particularly outside of just the big money center banks?
Yeah, I've bought some regionals today, and I do think they're down 10 or 15% from their peaks, and so that's one positive going forward. Many of them yield 5 to 5.5%. I bought this morning, KeyBank, KEY, yields close to 6%, and it seems to me that the commercial real estate problem has been reserved against for the most part, and so KEY or Truist TFC or Citizens CFG, to my way of thinking, are very attractive investments for the immediate to long term.
I am curious on the point, though, of commercial real estate. There's been so much hand-wringing right now about the next shoe to drop, the idea that we haven't really worked ourselves through the CRE crisis or whatever we want to call it here. You're not worried that we're going to see any sort of major defaults, or at least not major enough that it would really rattle the market?
Well, I think it's dependent upon the economy. If we get a decent recession, then obviously commercial real estate loans are a little less attractive than they are at the moment. So watch the economy. As I pointed out before, I think in many cases these regionals have had a year or 2 years to reserve against the potential for additional losses. It's just, they traded PEs around 9. They traded price to book values of 0.7 or 0.8 relative to something like JPM. And so, I like them for the long term.
Hey, Bill, one of the big news items that really moved markets over the last 24 hours is what we saw over with the parliamentary elections and Macron calling for legislative elections at the end of June, early July. The market moved quite sturdily here. The euro hit a 1-month low. You got a pop in yields. The BTP Bund spread really blew out. You got a weakness in the equity market over in France in particular. What did you make of the market reaction to what we saw?
Well, I think it's to be expected. I think in terms of an attraction, German 10-year bunds and French oats, the 10-year there, their spreads have narrowed significantly in the past month or two relative to treasuries, and today as well by 8 or 10 basis points. So there's coming a point where European bonds are more attractive than treasury bonds, in my opinion.
Where? What European bonds would you be looking at, Bill?
Well, I mentioned 10-year bunds, 10-year oats, Italian bonds as well has gained more traction in the past several weeks, and certainly after last night's snap election in France.
And it's interesting too, Bill, because we talk about what happened overnight with the EU elections and the snap election in France coming up. We also had 3 elections, of course, in India, and Mexico, and a couple other places, South Africa, that also rattled investors. And of course, as you know, we still have a big election here in the U.S. that could have a dramatic impact on investor psyches. Are those, at least here in the U.S., as we move forward to November, do you think that is going to be a tradable event? Do you think that the policy differences and the reaction to whoever wins in November will be market moving?
Yeah, I think so. And in these cases that you mentioned, these prior elections in the last few weeks, they've all moved right, and there's a certain consequence to that. But there's also an element of uncertainty, and so what we've seen, last night and what we've seen in the last few weeks is a reaction to uncertainty in terms of not only the party that's dominating, but uncertainty in terms of what their policies will be. And I think as we move to November and something becomes more clear in terms of who might or who might not win, the uncertainty plus the potential policy implications, I think, could impact treasuries significantly.
Yeah, it's going to be interesting to see your next investment outlook post-election to see what you have to say there. And it's interesting, too, how you've compiled all of your past investment outlooks into a new book. One thing that I didn't really see in there, and that maybe you'll have to do in an updated book, is maybe have a little bit more discussion about AI and what that means for the market as a whole. When you look at all the AI hype around here, the run-up in NVIDIA, do you find any sort of opportunity there that's to your liking? Do you think it's sustainable?
Well, I'm not a pro there, but I would say that AI, to my way of thinking, has the potential to increase productivity in general across the U.S. economy. The question is by how much, or if at all. To the extent that it even increases productivity by 0.5%, I think it's significant in terms of economic growth. So, that's the bet. Specific stocks, I like Microsoft. I've never been involved with NVIDIA or Amazon or even Apple today, for instance. But Microsoft is my favorite. Other than that, it's a wait and watch type of situation in terms of the impact on economic growth.
So, Bill, not only is it the launch of our new show, but also you will be selling piece by piece a U.S. stamp collection on Friday and Saturday at Robert A. Siegel Auction House. Now, you've sold your stamps before. You are clearly a very well-known collector. Some of the estimates, though, think this could bring in a record of something like $20 million. Bill, what told you that this was the right time to sell in this kind of environment, these stamps?
Well, I'm 80 years old, and it's time to turn this over to some other future collectors. And I also think, a slight negative here is that stamp collecting has always been a function of kids and their collecting who later on become adults and wealthy adults. But in this case, I don't think the kids are collecting stamps anymore. They're more involved with their cell phones and their games, but that'd be one of the reasons too.
Well, I could tell you, Bill, there are still a few nerdy kids out there that are still into it. I know a couple in my family that still do it. I don't think they're in the market for the stamps that you're selling. They're pretty pricey here. But I was just looking through this is just an impressive collection. Obviously, probably the star of that, of course, is one of the inverted Jennies. But I am curious, like when you look at just the collection that you had and how you put them together here, was that really from the heart? Did you sort of look at this and just say, oh, this will be a good deal later? Or did you say, look, I just want to own this and I want a piece of this and I want to be able to hold it and look at it?
No, my mother back in the 40s and the early 50s collected stamps in order to send me to college. I took those stamps to San Francisco in 1961 and tried to sell them. They'd offer me nothing relative to the 3% on the face of the stamp. So basically, when I had some money 20 years ago, I said, she had the right idea, but she bought the wrong stamps. And so if I can apply bond market economic terminology and philosophy to the stamp auction, much like paintings have a provenance and so on, then perhaps we can make some money as well.
All right, Bill, always great to talk to you, and good luck on that auction later this week. Bill Gross, the co-founder of PIMCO, the Bond King, and I guess now, too, Alex, the Stamp King as well. A lot more coming up here on The Close on our new revamped set here in Studio 2 at Bloomberg headquarters in New York. We'll be back in a moment. This is Bloomberg.
The correlation is broke down as more of a momentum type of market. Actually, it's a very momentum-driven market with AI that you've just talked about. And so I wouldn't be so keen, I guess, on correlating stock prices to interest rates at the moment, at least.
PIMCO Co-Founder Bill Gross. This is the countdown to the close. I'm Romaine Bostick alongside Alex Steele with about 10 minutes until we get to those closing bells, Alex. And it's kind of interesting. He talks about that momentum here. Not seeing a whole lot of that momentum here today. In fact, some of the biggest movers aren't in the tech space. It's your old favorites, utilities, energy, and materials.
That's what I'm saying. Is momentum actually not really in AI, but it's in those derivative plays in particular. You're taking like utilities really outperforming overall. The best performing stock in the S&P is Constellation Energy. PG&E up huge, got a nice upgrade, and you can really see there
the momentum. Did you rig this
so
it was all just about like energy and utilities today?
Did I purposely do that for the launch of our new show?
Yeah.
I mean, obviously, I have that skill.
You have that power,
I
really?
do. It's amazing.
I need some investment advice after the show then. You give me some tips here. All right, well, you see the movements there here. Unfortunately, Apple not participating here on this day. A bit of a disappointment here coming out of that big AI announcement. We want to continue our coverage here as we count you down to the close with Olaolu Aganga. She's the US CIO over at Mercer, and she joins us today live from Nashville, Tennessee, for Mercer's annual Global Investment Forum. What's the word on the ground there? What are investors talking about? Are they talking about AI, or are they talking about Alex's favorite stocks, utilities?
Thank you so much for having me. We have here in Nashville about 500 asset owners from across a number of different industries. It's our marquee event. We love it. To your point, we come together and talk about some of the major themes that we're seeing, what we're thinking of, what clients are hearing, concerned about, and going into the future. AI is definitely one of them, front and center. how we're going to use it, how others are integrating it, the pace of evolution, and then, of course, the industry sectors that are continuing to lead those innovations. So we never want to be left behind.
Never be left behind. But I mean, I'm sure you know this, and obviously a lot of the folks at that conference know this. We are kind of in a weird time right now. No one really seems to have any sort of agreement on where we are in this economic cycle. We have a big Fed meeting this week that, in theory, should sort of put us on the path at some point later this year to the start of rate cuts here. How are people, if at all, repositioning or maybe reallocating their portfolios around these big inflection points that all seem to be coming at once?
So the good news here is that a lot of the clients that we work with tend to not reallocate their portfolios based on any type of short-term noise. I mean, if they did, they'd been whipsawed. Earlier in the year, it indicated, or at least markets were looking like we're pricing in a number of rate cuts. That was not Mercer's view. That was what the markets were doing. We were always of the view that there would be a rate cut, but not nearly as deep and not nearly as quick as the market was pricing. FOMC meeting starts tomorrow. Of course, the decision is on Wednesday. Our view is still that we're expecting at least a cut later in the year, similar to what we're seeing from other central banks across the globe. Inflation is dissipating very, very clearly. We can see that, maybe not at the same pace, or at least as quickly as we thought. But reallocating portfolios based on all of these market moves is not what we typically recommend. We focus on long term.
Focus on long term. I wonder how then you see the earnings growth next 12 months maybe evolving. It looks to me like, it looks in general that U.S. tech earnings growth is going to be declining. It's still positive, but it's definitely off the highs. Whereas I think it was Bloomberg Intelligence had a great report that showed it was sort of healthcare, materials, et cetera, could see 25% growth by the fourth quarter. Is that a good bet? Is that kind of what you guys model?
Earnings growth has been strong. I mean, if you look in May, the markets were great. We're looking, going through earnings seasons. We had come into earnings season really expecting earnings growth of about, call it 3.4, 3.5%. It ended up being closer to 6%. So earnings growth has been strong. And overall, as we look at portfolios, we are actually more constructive on equities. We'd been overweight equities a little bit in our portfolios. We increased that recently because of a lot of the fundamentals that we're seeing, and frankly, the positive momentum going forward. It is still more longer term type of views that we have, but tactically speaking, yes, we're adding to equity.
And is that the earnings growth you see of this year, or are we yet borrowing from next year?
I mean, at the end of the day, there are a number of sectors, tech being one of them, as you know, that tends to lead the innovation. By definition, it means that they push out the bar. It's a little hard to call. But the innovation keeps coming, and then these valuations, it's not like it's cheap. U.S. Equity markets are relatively expensive, but the performance that we're seeing in the earnings are delivering. So the one thing you know about forecasting is you're almost certain to be wrong.
Thank you. I think you just broke the hearts of a lot of investment strategists out there watching this show. But point taken.
They would say that. They would say that.
Oh, yeah, they would say it privately, not to their bosses. I am curious, though, here, Olaolu, when we talk about AI, and not only just how it becomes an investable opportunity, but actually how companies themselves will implement it, particularly in the finance space. And I know Mercer has done a lot of look into this here. I am curious as to, whether we're seeing that already, and if so, where exactly is the use of AI being allocated within those firms?
So, yes, AI very much is one that we're continuing to explore, use within our firm in a number of different formats. So how can we make some of the tasks that could be a little bit more repetitive, a little bit more streamlined? So everything from note taking, how do we use them in presentations? We have working groups internally continuing to see how we can use them to become more efficient in our day-to-day tasks. So manage your notes. Are we looking for themes? Could they look through and augment some of our regular processes? We have working groups and sessions with our clients. We have an AI survey that we've indicated that we're happy to share as well. So a lot of these developments we're looking at, and we're in the examination period, frankly, because as you indicated, everyone is looking at it. Everyone is seeing how they can incorporate it, and finance in particular is more immediately right now, a lot more of the ways that we can become more efficient.
All right, going to have to leave it there. Olaolu Aganga, U.S. Chief Investment Officer over at Mercer, helping us count you down to those closing bells here on this Monday afternoon. Alex, it's just about 3 minutes until we get there. The good news is we got green across the screen, but I was going through the biggest gainers of the day. You go through the top 10 in the S&P 500, you're not going to find a single pure play tech stock in it.
Nope, you're definitely not.
Yeah.
I mean, it's all over the map, but Constellation Energy is definitely it's the top performing stock in the
And you
S&P.
had Enphase and a few others. And then you had General Motors in there. You had Southwest Airlines in there, of course, on the back of the big news there.
Yeah.
So of Elliott taking a stake in that company as well.
Here's something interesting. The New York Fed had its consumer optimism about stocks out today. Did you see that? It hit a 3-year high. So basically, the probability the stocks will be higher a year from now hit 40.3%. Like, the optimism is there. You're getting money, you're getting return. You feel good about it.
The optimism is there, and I guess does that translate into better gains? Because it seems like they've still kind of been incremental over the last, few weeks.
But is that the momentum? Like, is that the YOLO and the FOMO?
Some people would say it's actually healthy to get the incremental moves rather than the big ones. As we break down all your market moves as we get closer to those closing bells right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. And here to help take us through the closing bell, it's our global simulcast. We're joined right now by Scarlett Fu in our newly revamped Studio 2 here in the Bloomberg World Headquarters. Meanwhile, Tim Stenovic and Carol Master, they're still in that old radio booth.
You know
but we still love them more than anything else as we welcome our audiences across all of our Bloomberg. I got a whole script here to read, Tim Stenovic and Carol Master, but I'm done. Go ahead.
Old can be good, sometimes even better.
I just wanted to make sure I was in the right place.
Yeah.
I also want to say congratulations on just a fantastic relaunch.
He's so nice.
Thank you. I worked really hard on this. Every weekend I was in here hammering everything together.
Yeah, working on the big screens behind you, right?
It's a lot of work.
Big
Should have seen him in his overalls.
Did you compose the music too, Romaine?
Yeah.
I do like it.
Did his overalls have a flower? That's all I want to know.
Yes. We'll go with yes. It's all fictional. Yes, they do, Carol.
That makes me so happy. All right, should we talk about the markets?
If you must.
What's going on today?
AI for the rest of us, Carol.
Yeah, AI.
That's what's going on today.
All in on AI. Although Apple shares right a little bit lower, guys.
Yeah, all in on AI.
Well, that's because Apple doesn't have its own AI, right? It's linking up with all these other companies.
Does anybody have its own AI?
Yeah,
NVIDIA
does. OpenAI does. Google's doing a pretty good job. Meta Platforms, you could argue, has its own with Llama.
And NVIDIA makes money no matter what.
That's right.
Okay, well, that's a good deal. When does this translate to Apple, though? Am I supposed to run out and buy an iPhone because of what they said today?
Yeah, maybe an iPhone 15 Pro or the next iteration of the iPhone, which I'm guessing is going to be called the iPhone 16, Romaine.
Okay, I'll put that on my calendar for, I don't know, what is it, 2045? All right, we get the closing bells here in New York. Green day across the screen, though the gains are relatively incremental. You're looking at a Dow Jones Industrial Average up more than 70 points on the day, or about 0.2%. The S&P 500 up about 14 points, or 0.3%, while the NASDAQ Composite looking to close out the day right now as we wait for these numbers to settle higher by about 59 points, or 0.4%. You saw a little bit more action here in the cyclical space here. Dow Transport's up about 0.9%, and the Russell 2000 going to close out the day higher by 5 points, or 0.25 percentage point.
All right, interesting, guys. Back to the S&P 500. 280 names to the upside right now. 221 losing some ground today, so not quite an even split. And two that are unchanged, Scarlett.
Yeah, let's take a look at the industry groups. This is, of course, IMAP, which shows you which sectors are in the green, which sectors are in the red. You've got utilities, and Alex, this is, of course, Constellation Energy, Vistra, which you've been talking about for a while now, gaining 1.25% as a group. Energy in second place, and communication services up by 0.6%. The laggards here are financials, consumer staples, and materials, but they're not falling by a whole lot.
All right, guys, let's get to some of the individual gainers, if I may, on this Monday. Southwest up at its highs, 9.4% to the upside, finishing the day with a 7% gain, up the most since about November of 2020. The Wall Street Journal did report earlier in the day that Elliott Investment Management built an almost $2 billion stake in the U.S. carrier, so investors certainly taking note of this one. The report saying that the size of the holding makes the activist firm one of the largest investors in the company, and that Elliott plans to engage with management. So stay tuned on that one.
Did you see one one of my favorite stories is on the terminal is about how Elliott is basically canceling the summer for a lot of CEOs as they taking all these activist stakes here. I'm sure all these CEOs are like, darn.
Tough stuff. It's tough stuff.
Sorry.
Yeah.
That's why they get paid the big bucks.
Exactly.
They don't have to work during the summer?
They could just put it on.
Have you met,
They can still have these combos from the Hamptons.
Okay. Yeah. Have you ever met any of these CEOs, Tim?
Whoa.
No
All
comment.
Right. No comment, yeah. All right, Constellation Energy. I think, Scarlett, you brought this one up. Finishing up pretty much near its highs of the days, up about 8.5%. This one, a top name, the number one gainer in the S&P 500. Utilities outperformer. BMO analyst James Thalacker saying he continues to see this company as uniquely positioned to continue to leverage its intrinsic and expanding extrinsic value, given the scale of its carbon-free asset portfolio and commercial capabilities. So reiterating its outperform rating on the stock, $248 price target, which is a fair amount of upside because the stock closing just under $215 a share. CrowdStrike, also one that was popping up. It's the second top performer in the NASDAQ 100, finishing the day with a gain of more than 7%. CrowdStrike, GoDaddy, KKR, all of them higher in the session as it was confirming that these stocks would join the S&P 500 in the latest quarterly weighting change. So some movement there in the index. All right, Tim, over to you.
Okay, you can probably guess that my first decliner today is going to be Apple. Worth checking in on shares as the Worldwide Developers Conference, WWDC, gets kicked off today. It's going to last the entire week, but the big news made today, shares finished today down by 1.9%. The company did announce long-awaited new AI features, including tools supported by ChatGPT. The idea is it's going to bring technology that's personalized, safe, and deeply integrated into the software of the company. It's going to summarize text, create original images, retrieve the most relevant data when users need it. We'll see, though, if it does prompt hardware upgrades. Investors did give that tepid reaction to the news, which not so uncommon when Apple does debut long-anticipated new features. Also, shares of AMD taking a hit today. This after Morgan Stanley downgraded the company to equal weight from overweight, saying investor expectations for the AI business, quote, seem too high. Shares falling by 4.5% today. Analyst Joseph Morris saying that AMD products are likely to win share in the client and server CPU markets this year. High expectations for its AI business don't leave room for much upside. Finally, checking in on shares of Celsius, which fell on the day today to its lowest level going back to February. Analysts again citing reports of continued decelerating trends in Nielsen's latest report that was issued today. Shares falling by more than 9%. The stock down more than 30% from its March 14th
This is the energy drink maker?
It's the energy drink, yeah.
One of my producers, she just drank like 3 cans of this right before the show.
That's why she's talking so loudly in her
Is that
ear
a
today.
regular thing?
Yeah, apparently. I don't know.
No, it's just for launch day.
I'll be honest, I've never had Celsius, but it's extremely popular. I see people drinking it everywhere. The stock has been gangbusters for years, but recently, these trends reports from Nielsen say there are some downward trends. Inventory changes made by PepsiCo, which distributes Celsius, but also softer sales trends are a concern.
All right, let's go to the bond market because it is quite interesting to take a look at it. If you look at the long end, you saw selling all across the board. You had a 3-year auction that was pretty tepid, and you really had to increase the yield in order to get people to come in and buy. The front end might be a little bit different, but you're looking at, say, the 30-year up by about 3 basis points. But it all really hinges on what happened in Europe, guys, and the sell-off in the bond market, particularly in France and some of the peripheral countries like Spain and Italy, as Emmanuel Macron called some parliamentary elections after European Parliament had a little shake-up there. So we'll see about any kind of follow-through selling as well. Carol.
All right. And do we want to just mention quickly this headline? Apollo and Condextral in talks for a joint bid for DXC technology. So this is coming from Reuters. So it looks like a joint bid just coming on. We were just talking a little bit about M&A space and some stuff going on. So we'll see. Maybe some deal flow.
Yeah, we saw those shares spike right at the close here, up about 11% here. And then, of course, adding to that now here in after hours trading, Scarlett. And maybe this is sort of a sign that maybe the M&A market is opening up and the IPO market could open up as well. We had news earlier today that StubHub might be ready to go public as soon as next month.
Yeah, we'll be waiting for that. And of course, the bankers are waiting in earnest for that. There's a lot of dry powder that needs to be put to work. And the only question is, what's going to happen with the economy? There's so much uncertainty. And of course, so much hinges on how the Federal Reserve positions its view of the economy come Wednesday.
You're so close to
go ahead,
now.
Romain.
Like I can just
oh my God, look, there you go.
Your shot now. It's like normally they have us spread out so far, and now Alex is right here. It's
we can
just lock
emails,
arms
man.
and
This is the
read my
end of
emails.
emails.
Did we have to turn this car
So how am I supposed to
around?
talk trash about Alex live on
great
set?
shot.
Now?
After, or on your phone. That's fair. Yeah, right? Why not? Tim,
You know, it was
help
a big
us.
deal in this studio when I moved from the chair that was far away from Carol to the chair actually next to Carol. It was
I
a
wasn't
sign,
so sure I
you know,
wanted that to happen.
the
but it
pandemic
happened.
that we were
I'm just
vaccinated.
kidding. I'm kidding.
It happens.
Don't worry, you guys are next.
Guess what, guys? It's time to go ahead and eat your Krispy Kreme, or at least this is according to a Truist analyst. Upgrading the stock, Krispy Kreme, which actually was up about 6.5% in today's session, upgrading it to buy from hold, reversing their October downgrade on the stock. Basically saying the overhang from the drugs known as GLP-1s is already here and fully reflected in the stock's current valuation. So it's time. Yeah, we know we want to eat healthy, but it's, you know, we like our sweets, so it's time to have
Already
a donut.
here, meaning like it's already been priced in or
That's
something?
what they are saying.
That's pretty impressive. What's not here currently is a mountain pass. This was an incredible story, guys. I don't know if you saw the video, but a huge chunk of a mountain pass road collapsed between Idaho and Wyoming. And this is also in our interest here because it's near Jackson Hole, Wyoming, which is where the Fed meeting takes place in August. This will not impact that meeting because you have to go on the other side. But the Rocky Mountain Summit, if you ever have to go there for one of their summits, you'll have to go around, take an extra hour plus, or fly into a different airport. And the question is, how does that even happen? How does that just fall down? And how do you fix that in a timely manner?
Alex, nature is undefeated.
It is.
Or our infrastructure is not so
That's
great.
what I was gonna
and
go
we got to
with.
prop it up.
That's what I was going to go
Did you
with.
notice that Alex brought it back to the Fed?
I know.
It always
I know.
goes
we're
back.
Bloomberg,
Very loose,
man.
but
It always goes
you gotta
back
love
to
the
the Fed.
effort, though, right? You know what this means? It means that somebody's expense report is going to show a lot of helicopter rides on it.
Exactly.
Come August.
Yeah, Mike McKee.
Well, you guys are looking darn good all
Thank you
together. We
very
kind of
much.
love that. Really, really nice. All right. Well, congratulations. And then we will see you again tomorrow. Same place, same bat channel, as they say. The closing bell.
People still say that?
Yes.
Oh, I don't know.
You know, it's kind of wacky.
Batman fans here.
Across platform, radio, TV, YouTube, Bloomberg
What
Originals.
about Superman?
All right. Yeah. Who doesn't love a superhero?
Wonder Woman.
Catwoman?
All right. Meow. All right. We'll see you guys.
Go to break.
tomorrow.
It's so easy to beat her. All right, stick with us here on Bloomberg Television. Our coverage continues here. Some great conversations up ahead, including with the CEO of Sotheby's and the CEO of MoviePass. You want to take a listen to that? Yeah, this is actually the original co-founder of MoviePass, a great story there. And we're also going to talk to the former India Central Bank Governor Raghuram Rajan. A nice preview here up ahead of all the big central bank decisions later this week. That's coming up next on The Close on Bloomberg.
Welcome back to the New Look Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Don't you love this new studio? It's so
brighter.
fresh and bright, and I guess that's maybe one reason why we saw a little bit of green on the screen. I guess we'll take credit for it. Incremental gains for the major markets here in the U.S. with the S&P back at that 53.61 level. We'll call it up about 0.3% here on the day. Similar moves across the board. There wasn't a huge updraft in tech stocks here on the day. NVIDIA did get a bid, but Apple, Scarlett, a little bit disappointing here. I think we were expecting a little bit more of a pop on the back of that AI announcement, but Apple finishing in the red.
Yeah, Apple finishing in the red, but let's talk about a tech company that did finish in the green. CrowdStrike up at record high, 7.3% gain. Excuse me. S&P said it's adding the cybersecurity firm along with KKR and GoDaddy to the S&P 500 effective at the start of trading on June 24th. Now, this gain is all positioning before passive index funds are forced to buy the stock to keep their holdings aligned with the changes in the S&P 500, the underlying index. And we're also keeping an eye on GameStop. Of course, Roaring Kitty came out on Friday and mentioned that he is still bullish on the stock, but that wasn't enough to lift the stock. And again, it's extending its declines now off 12% on the day. But our top story this hour has to be about Apple. It is kicking off its most consequential software event in decades. We know its stock has trailed big tech peers who have made major inroads into the generative AI industry, first by Microsoft, which in January rejected Apple, or I should say replaced Apple, as the world's most valuable company by market cap, and more recently by NVIDIA, whose chips power AI and has seen its market value top $3 trillion, surpassing Apple. Romaine?
All right, well, Apple did actually unveil that highly anticipated suite of AI features. That was at today's Worldwide Developers Conference. Tim Cook trying to shake off investor pressure that the company can be a leader in AI.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Tim Cook laying it all out there for us. Mark Gurman going to break it down even further. He's Bloomberg News' chief correspondent on this issue. And of course, Mark, maybe this fell flat because you basically been reporting on all these features now for weeks leading up to this. But give us a quick sense here. What did we get new today, or what are we going to maybe see new at some point when we start to buy those new iPhones?
It's interesting because what Apple's done here is they've taken a bunch of features in AI-related technologies that we've seen for well over a year now from OpenAI, Microsoft, Meta, Samsung, and they've consumerized it. What Apple's known to do is take really advanced technologies and release it in a form that mass consumers can understand and want to use in their daily lives. So what they've done is they've integrated that deeply. For example, if you're writing an email, it might suggest, do you want me to proofread that email for you? Do you want me to rewrite that email for you? You can record a phone call and get a transcription of that phone call. You can get transcriptions for voice memos. You can have the device edit your photos using AI. You can create an AI emoji. So it appears to be thoughtful integration of AI in core use cases that people actually want to use AI. But they also have this partnership with OpenAI for what I call everything else. It's a chatbot built into the iOS and iPadOS and macOS interface, where if you want to ask ChatGPT questions, if you want to have ChatGPT write something for you from scratch, if you want ChatGPT to create something from you or solve some difficult math equations or create a table or a spreadsheet for you, you have that built into iOS as well. So they've taken a very broad approach to AI. They have their own limited AI infrastructure on device and in the cloud, but because that's not enough, they needed that OpenAI partnership. So they're basically bringing everything you could want in an AI experience to the iPhone with the next version of their iPhone operating system. And that is sending a very powerful message to Wall Street that even if we don't have that technology, we're able to strike the right partnerships to bring it to the consumer anyways.
Mark Gurman there, our Bloomberg News chief correspondent on this issue. A closer look at what we learned out of Apple today. And a little bit earlier, we spoke with quite a few guests here about the new AI announcement.
A demo always looks good, and I believe in try it yourself, see how it works for you, and then give a real opinion of it. But some major steps were demonstrated today. This is one more type of AI, Apple Intelligence. I have AI myself, actual intelligence.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
Some of the developers at Apple have been a little bit surprised that features and functionality that they developed is going out so soon in a little bit of an un-Apple-like way. And I think that's good. That means they're going to iterate more and a bit faster, which I think is going to end up helping the consumer and all of us in the long run.
A lot of great voices that we've heard on this network on the big announcement by Apple today, and those great voices continue right now. Gil Luria, Managing Director and Senior Software Analyst at D.A. Davidson, joining us right now. A neutral rating on the shares. You listened to the announcement today, Gil. Is this going to move the needle effectively? Are the addition of these features, does that mean we're going to be buying more iPhones or maybe spending more on Apple services?
It looked good. The presentation was a good one. Now, we had two different presentations. We had the traditional Worldwide Developer Conference, the first hour, that was about a lot of incremental improvements across the OSs. But the last 45 minutes showed capabilities that only Apple is doing. And some of these capabilities are capabilities that only Apple can do. I want to really congratulate Mark that you just had a minute ago. Did fantastic reporting leading into the event and capturing what we should expect for today. But also we hit it on the nose just a minute ago, talking about the fact that Apple just consumerized generative AI capabilities. Up until now, the tools we've been using, ChatGPT, Perplexity, Claude, Llama, were not consumer built applications. They were applications that had some consumer UI, but they weren't built into our experience. And what Apple showed today was how to build Gen AI into the experiences we're already having, and that's meaningful.
I know we didn't really get any details about kind of the cost and some of the partnership that it has with OpenAI, meaning what it's going to cost Apple specifically here. Do we have any sense here that there is going to be a financial balance, that whatever they need to pay out in order to bring this in, that it will sort of pay off with whatever added revenue they get on the consumer side?
The dust has to settle a little bit on the puts and takes, but let's talk about one aspect of this. Most of what they showed was on device. So it carries no incremental cost to them, but provides incremental functionality. If a consumer then opts to use ChatGPT, that's going to have to go to the cloud. There will be a cost to that. We don't know yet if this is a ChatGPT instance in an Apple server or through OpenAI and Microsoft Azure, which will carry a higher cost. Having said that, let's not forget, Google pays Apple to put search on Apple. It wouldn't be too surprising if ChatGPT is paying Apple to put ChatGPT on Apple. If OpenAI is paying Apple, those details will have to emerge over time.
All right, so there's still a lot of details that need to be sorted out, but for now, consumers benefit because they'll have access to the technology in a way that's more accessible that they haven't through other platforms. Another question here for you regarding hardware, because Apple has also said it's going to make its Vision Pro more accessible to international users. How critical is this device, which has so far been kind of not a home run, but it's out there for the hardcore Apple fans? How critical is Vision Pro to Apple's ambitions in generative AI?
Not much in the short term. This is a device that's very expensive. It's still a little awkward. External battery pack, limited number of applications for now. In the 3 to 5 year time frame, we are talking about the next most important platform in hardware. And it's another example of what I said at the outset, which is not only is this something that Apple is in the lead in, it's hard to imagine anybody else delivering this type of capability anytime soon. So even if it doesn't have a financial impact this year, next year, Apple is extending a lead in the most important platform that's coming in the 3 to 5 year time frame.
Got it. Okay. And to back up, to go back to what Romain was talking about, asking about the cost to Apple, is any of this going to slow down Apple's buyback announcements or its dividend increases? I mean, are we going to see a cost in its return of cash to shareholders?
Doesn't look like it. The CapEx and R&D spend that they've had to get to this point is already reflected in the numbers we've looked at, and they continue to buy back shares. They continue to increase the dividend. If we were to see a big inflection point in growth that would justify further investment, they may reconsider those payouts. But that would be a great thing. If Apple can accelerate top-line growth, that would be more than enough reason to slow down the return of cash to shareholders. They've had to do that over the last couple of years because they haven't had any growth. Investors would very much welcome an acceleration in top-line growth, even if it would come at the expense of less share buybacks.
All right, Gil Luria, thank you so much. Gil Luria over at D.A. Davidson giving us his instant analysis on the Apple Worldwide Developers Conference. And I asked that question about the use of cash because a $110 billion stock buyback plan is so massive. It's kind of incomprehensible. It's bigger than a lot of tech companies.
Yeah, and I don't know. I mean, why go down that road? I understand it's immediate return to shareholders, but shouldn't some of that be put back into the company at this point?
Yeah, and
particularly given the potential costs.
Right, right. And maybe to develop its own technology, which, it's in a position where it has to play a lot of catch up.
Yeah. Did you watch this developers conference? Why was Tim Cook outside?
I don't know. Maybe.
Yeah, this is like his new thing.
These
now,
are great questions.
He just strolls around the woods in Cupertino.
He needs a new look. Like we have a new look. Right?
Yeah.
There you go.
I agree.
All right, coming up, we have the top three where we focus in on the top three movers and shakers at the center of the day's big stories. This is The Close on Bloomberg. It's It's time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Paul Singer, the billionaire activist investor taking aim at Southwest and 6 other companies. Data compiled by Bloomberg show he has acquired 11% of Southwest, worth $2 billion. Of course, he's seeking changes, but they sound pretty general right now.
Yeah, pretty general here. But I mean, this guy's been busy. You mentioned all the other guys, Texas Instruments, Johnson Controls, Anglo-American, Sensata. It'll be interesting to see how they pull this all together here. But at least for right now, this appears to be the CEO's worst nightmare for their summer vacation plans. Well, if that $2 billion stake is up here on Southwest, I'll raise you one, because apparently Edgar Bronfman Jr. is now trying to bid for National Amusements. Of course, this is the controlling company over at Paramount. Now, he's only vying for National Amusements, so in theory, he would still have some sort of a stake in Paramount through this, but primarily what he's just buying are, I don't know, something like 1,500 movie screens that National Amusements controls.
I'm so confused how many bidders there are here at the last hour.
It's so complicated, too, because it's like really all people want is Paramount. But the way Sherry Redstone structured this company and the legacy of Viacom and the whole formation of National Amusements, it just means that you got to just really just peel back all the different layers of the onion to even get to the core of what's going on.
And you got to convince Sherry Redstone to go along with you, because she holds all the voting shares.
That's right. Here. You know how you can do that?
That's right. All right. Well, the third person we're watching, speaking of, is Will Smith. The actor is back on the big screen in a big way with the fourth installment. Yeah, of his Bad Boys franchise with Martin Lawrence. This one is called Bad Boys Ride or Die, and it was the weekend's top performer. $56 million opening.
Okay, Ride or Die. Is that a reference to their age? Because, you know, these guys are getting up there.
They certainly are.
All right, I did not get a chance to see this movie, but it actually did pretty well. About I think it said something like $57 million.
A good but not great start, according to Bloomberg Intelligence.
Yeah, not great, but I mean, look, these are two, at least one of them is one of the biggest stars in the world, and of course making his comeback from
Do you think there's any
the
slapping
slap
in the movie?
world. There is a reference to the slap in the movie, I am told. I won't spoil it for anyone, but when we come back, we're going to take a deeper dive into the movie space here with a look at the blockbuster weekend, not this weekend, but all the way back in 1993 when Jurassic Park was released. And here's a question before we go to break. What's been the highest grossing film so far this year?
This year?
All right, time to look back in history. On this day, back in 1993, Steven Spielberg's dinosaur dream, Jurassic Park, began previews on roughly 1,400 screens across the U.S. It was an immediate hit, taking in a thin record, $47 million in its extended opening weekend, and it would go on to be the highest grossing film of 1993 and eventually surpass $1 billion in ticket sales worldwide. Now, while its box office records have been overtaken since by blockbusters like Titanic, Frozen, and Avatar, Jurassic Park's legacy is one that really strikes right at the heart of the Hollywood magic that for decades had drawn so many people to the theater. With 3 Academy Awards for visual and sound design, the film's pioneering use of CGI and its creative use of animatronics paved the way for the special effects now commonplace in big-budget films. So much so that in 2018, the U.S. Library of Congress deemed Jurassic Park culturally, historically, and aesthetically significant, preserving it in the National Film Registry. It's a reminder that instilling a sense of wonder, a sense of awe, really is the key to getting people into movie theaters. But is that enough today? In an age when Netflix's standard home streaming plan costs $15.50 a month, about what a single movie ticket costs in many markets. Remember, movie theater ticket sales remain a third below pre-pandemic levels, and while domestic box office receipts for the most recent weekend did manage to meet projections, aided, of course, by Bad Boys Ride or Die, total sales for the weekend of $103 million, that was still 38% below a year earlier, according to Box Office Pro. Now, it's quite possible that none of the big budget films slated for this summer topped the $1 billion mark in ticket sales. Excluding the 2020 pandemic shutdowns, that would be the first year that that's ever happened, going back all the way to 2008. And that brings us to our question of the day. Right now, the 2 highest grossing films of the year, they are Dune Part 2, which has grossed more than $700 million worldwide, and Godzilla Kong, which has pulled in almost $600 million. But maybe there is hope in the horizon that we will get a $1 billion film this year. Cinemark Holdings last month reported sharply higher first quarter profits and a big lineup of big budget films delayed by the pandemic and the Hollywood labor strikes. They're going to finally start to hit the screens late this year and into 2025. that includes a new Captain America, a new Mission Impossible, and yeah, even a new Jurassic Park.
And maybe that's part of the issue. All of these sequels are, the third installment or the fourth installment of existing franchises rather than new ideas. Just a thought. In any case, the love of moviegoing formed the backbone of a company called MoviePass. It was a subscription service that took off in the mid-2010s, offering access to movie tickets at a discounted monthly rate. But it then fell from grace and eventually shut down in 2019. A new HBO documentary is shining light on its little-known origins. The company's co-founder, Hamay Watt, spoke to Bloomberg about the initial struggle to raise funding.
One of the things we talk about is just the idea that sometimes we walk into the room raising capital, we're probably the first time that, at that time at least, the two black co-founders were walking in trying to innovate on an industry and trying to reimagine that industry. So that's hard by itself. It's also hard when you have the extra unfamiliarity of not having invested perhaps in folks that looked like us.
Joining us now with more on MoviePass is Stacy Spikes. He is the other co-founder and the current CEO of MoviePass. So, Stacy, I'm a little confused here. MoviePass launched with great fanfare. It was super popular, then it crashed and burned, and now you've brought it back and you've made it profitable. Is that right?
Absolutely.
How'd you do it? What's different this time?
Last year, we had the first profitable year in the history of the company. We used an AI machine learning engine to be able to do selected tickets and be able to let people do variable pricing, and that made a really big difference between the first version and the second version.
So variable pricing, that to me sounds like if there's a lot of demand, you're going to have to pay up. Is there any way to be more predictive in terms of people know that they're going to get a good deal when they go in for these tickets?
Yeah, traditionally variable pricing goes up above normal price. Ours goes down. So what we do is we show you where you can find value. It's never going above regular ticket price. It's always going below and showing you, hey, the same movie's showing at 2 theaters, but where we're getting it wholesale, we can drive traffic to those locations.
So this is a little bit different than the first iteration, or at least the iteration that most of us got to know, which was a little bit more static in its pricing. Talk a little bit here about the partnerships, if at all, that you have to have with the theaters themselves, because I know that was a big component of the initial iteration of MoviePass.
Yeah, we built this version where it works either way. So AMC, Regal, Cinemark are all in the system, but the new machine learning system allows us that variability that we don't even need the partnerships. But we have them, 25% of all the theaters, we already have strategic partners and are driving that traffic to them.
I have to ask you a hard question here, and that's about going to the theater overall and whether that moment has passed. Because when MoviePass came out, that was pre-pandemic. Theaters were already struggling, and some saw MoviePass potentially as a lifeline. Of course, everything changed during the pandemic. Everybody's got streaming services at home. How confident are you that enough people are going to return to the theaters to continue to keep MoviePass profitable and growing?
Do you know in a 7-day period, more people go to the movies than the entire NFL season combined?
No.
People go to the movies 10 times more than all sporting events. So a lot of times we're only reporting what the top number did, but 200 million Americans are still going to the movies, even post-COVID. So what we like is it's a sleeping giant that a lot of people don't realize is about to come back.
I appreciate that context. That's something that we don't hear enough about. Of course, as Romain was reminding us, we had some big movies in the last couple of years. We had Barbie, we had Oppenheimer. We're going to have some tough comps for this year. How important is the quality of the movie, the quality of storytelling, or is it a game of if I present it to you at the right price, that experience of going to the movie is enough?
You know, what we're starting to see is it's changing. It used to be just about the tentpoles, but when you see concert films like, you know, with Taylor Swift and Beyonce, you're also seeing a larger breadth of independence. We saw last summer that Sound of Freedom ended up outgrossing Mission Impossible, and that was an art house film. And so a lot of times it's easy to report on the tent poles, but there's a lot more content that people just aren't reporting that's really doing big numbers.
How is that getting out there to the people in terms of the marketing of it? Because we always talk about theater going just on those tent poles, the action movies, the superhero movies here. But if there is more, I guess, of an art house feel, for lack of a better term, out there, you think that could be the savior?
Yeah, I really do think it's a wider base rather than just higher peaks. That the art house, like when you see things like Civil War and other titles, they really are starting to expand the base that you just normally don't see. It's harder to report that information, but it's definitely there making a difference. The other thing I'll add is if you go back in history and you look at the last pandemic, the greatest period of cinematic growth was post-20s after the 100-year pandemic flu that happened 100 years ago.
All right, Stacy, I appreciate you being here. We're going to have to leave it there. Stacy Spikes, one of the co-founders of MoviePass and the current CEO, a great documentary out there here about the history of the company and the history of the two founders.
Yeah, I'm looking forward to watching that one. All right, we have some breaking news here. Interesting headline. Elon Musk will ban Apple devices if they integrate OpenAI at the operating system level. Again, Elon Musk to ban Apple devices if they integrate OpenAI at the operating system level.
Ban Apple devices from what?
That's my question. Yeah. From Tesla, from, I don't know, SpaceX, in his family? I don't know. It's not clear. Another headline is that, according to Elon Musk, visitors will have to check their Apple devices at the door.
Okay. All right. Well, I think we have to dive a little bit deeper into that story. I'm not sure is that the door to his home or the door to the company here, but nevertheless, of course, a powerful man basically saying that, hey, don't bring your Apple devices if it has OpenAI on it?
Yeah, well, we'll need to dig into all of this, but as you can see, Apple shares, that is a flex, slightly lower in after-hours trading. This is The Close on Bloomberg.
So breaking news involving Elon Musk and his variety of companies. In a posting on the social media platform X, Elon Musk said that he would ban Apple devices if they integrate OpenAI at the operating system level. Bloomberg's Tom Giles joining us right now, who leads our technology coverage here at Bloomberg. And Tom, kind of explain exactly what he's talking about. Is this concern here about corporate security?
So this is very new, right? This is just out. Elon Musk has made an announcement that you're basically going to have to check your iPhone at the door if Apple weaves OpenAI at the very basic, with the OS, the operating system level. As you know, as we've been talking about all day, Apple is in the process of announcing the way that it's going to incorporate OpenAI, ChatGPT, into its devices. It's going to be called Apple Intelligence. And this is Elon Musk raining on the Apple OpenAI parade. As we all know, Elon Musk was an early integral part of OpenAI, but ultimately he broke with OpenAI, has very different views on what on how to pursue generative artificial intelligence. He has concerns about the safety of generative AI, the kinds of AI that we see in ChatGPT. And he's also making his own competing product. So it's one thing to talk about him, AI and safety, but this is also someone who's developing his own alternative. So it's hard to know when his concerns over safety end and where his competitive, the threat to him competitively really starts to kick in.
Fantastic context there for this headline. Tom Giles, thank you so much. Tom Giles here with the latest on the Elon Musk headline about Apple devices and OpenAI technology in Apple devices. Let's turn now to the world of auctions, because earlier today we asked Bond King Bill Gross about why he has decided to auction off one of the most valuable stamp collections in the world.
I don't think the kids are collecting stamps anymore. They're more involved with their cell phones and their games. And so if I can apply bond market economic terminology and philosophy to the stamp auction, much like paintings have a provenance and so on, then perhaps we can make some money as well.
That was Bill Gross, the Bond King, talking with us about his upcoming auction of his stamp collection, which could set an all-time record, as high as $20 million. But we want to take a step back and broaden the conversation and talk about the overall state of the auction business. We're pleased to say joining us now is Charles Stewart. He is CEO of Sotheby's. Charles, great to have you here with us.
Thanks for having me.
So I want to get a sense from you on what demand looks like for the items that you auction off, given that we have risky assets like stocks, like Bitcoin flying so high. What does it look like all this year?
Well, we've just been through, in the last few weeks, our biggest auctions, art auctions so far this year, our May sales. We sold nearly 600 paintings over the course of a week. For a little over $630 million. So it's a pretty good barometer of interest and appetite. And I would say that it can only be viewed as an affirming moment for the art market because we had bidding from over 60 countries and a very high sell-through rate.
Can you tell us a little bit more about the bidders, how broad and how wide this audience is, and whether it's the same folks or you're really growing the audience?
Yeah, we absolutely very, very global audience. I mean, last year, in the full year, we had bidding from over 130 countries across our 55, department categories in art and luxury. So having 60 over the course of the week is, I think, again, affirming that there's a lot of global interest in the art market. I think it was particularly noteworthy that we saw strong demand coming from Asia.
I'm curious, too, about kind of the complexion of sort of, I guess, new art, if you will. A couple of years ago, NFTs were all the rage. I don't know what happened to them. But the idea that you had sort of this new breed of collectors coming in who wanted something more than just, the big masters or the big contemporary artists from the, 60s, 70s, and 80s. Are you finding a little bit more appetite for that, even if it's not NFTs, but the idea that we could see something new kind of come into this collectible space?
At any given moment, I think there's always interest in contemporary art, the art of now, because it, speaks to all of us, in some way. It reflects the issues and perspectives that, that we have and that we see reflected in front of us and all around us. So there's always interest in the art of today. This season was no exception. We have a sale that we call the Now Sale for exactly that reason that did quite well. Yeah. Artist records were set, new artists introduced to the secondary auction market, and we'll continue to see that over the course of this year.
How are you dealing with some of the upstart competitors in this space? I mean, we particularly saw this with some of the digital sales, other sort of companies that with a little bit more of an online presence, really trying to go at sort of the old guard, the Sotheby's and the Christie's of the world.
Well, first of all, Sotheby's, we turned 280 years old.
Congratulations.
Thank you, this year.
You don't look a day over 100.
Thank you. Thank you very much. And the heritage and global platform, how well established our brand is hugely important in how we operate. And so we're always innovating, and we're still at the forefront of our industry almost 3 centuries later. So we're used to welcome new competitors in the market, partly because we want to see access expand. We want more people to be discovering, experiencing, and ultimately collecting art. So if new competitors can help bring that to fruition, so that's great.
You say you're always innovating. You're also innovating on your fee structure as well. That started in late May. So you had a couple of auctions to kind of see how it works. What's the change, and who feels it more, the sellers or the buyers?
Right. Well, the first thing we did is to lower our buyer's premium. That's the commission that buyers pay when they buy a luxury object or a painting, from as high as 27% down to a flat 20%. So I like to say, if you can calculate the tip at your New York restaurant, you can calculate your buyer's premium at Sotheby's. It's very simple, it's very transparent, universally popular with buyers because it is lower and it is very simple and transparent. So it's been in place for about a month so far, and we are seeing significantly increased numbers of bidders in the auctions that we've had so far, which is exciting because, again, for us, this is about increasing our audience, expanding access to what we do.
I mean, looking a little bit longer term, I mean, you talk about the age of this company, 280 years old. I mean, and you look forward to maybe potentially the next 280, long after we're all gone here. How do you see the business overall evolving, if at all? Are there challenges that you're looking to already and saying, how do I position Sotheby's to sort of get through those challenges 10, 20, 50 years from now?
Well, absolutely. I mean, first of all, what is popular, what's of interest is constantly changing, and we have to be very attuned to that. We've moved into some luxury categories like game-used sports collectibles, for example. That's been an exciting growth category. I've set a lot of records in that category. Sneakers, certainly collector cars as well. So what we sell and how we source it is constantly changing. We're also finding ways to new sales channels. We're known for auctions, but we have nearly $1.5 billion of work that we sell privately, directly to sellers. We have retail, we have e-commerce. So we're expanding to more of a broader multi-channel marketplace business.
All right, Charles, going to have to leave it there. Charles Stewart, the CEO over at Sotheby's. A nice look here at the auction market and maybe the next 280 years for the auction house Sotheby's. All right, we're going to pivot from that here and take a closer look at the macro as investors this week are really looking ahead to Wednesday. We are going to get the latest read on those U.S. inflation numbers, and we're going to get a big decision out of the Fed. Earlier, we had a chance to catch up with PIMCO Co-Founder Bill Gross. Here's what he had to say.
The Fed has basically signaled they're sort of done, perhaps 95% done in terms of raising rates. It's not that they can't raise them if the print on CPI isn't bad for the next several months, but I think the market basically anticipates the Fed to stay, and maybe in September, maybe in December, maybe one or two cuts if the current numbers continue as we've seen them.
Bill Gross there, a man who knows a lot about bonds. Our next guest knows a lot about monetary policy. Raghuram Rajan is professor of finance at the University of Chicago Booth School of Business and former Reserve Bank of India governor, among several other stints that he's had throughout the years here. And let's just get right to it here. No one's expecting any change in monetary policy itself out of the Fed on Wednesday, but they have to update that dot plot, update that summary of economic projections. Do you think they're going to be confident enough to actually say or telegraph that rates will come down at some point this year?
Well, I think we would expect dot plots to move a little, probably down to 2 or 1 cuts this year. It's hard to tell whether it'll be 2 or 1, but it'll come down. And the equally important question is, where do they expect interest rates to end up at? Do they sort of push up the long-term real rate in a sense, which currently seems to be about 0.65%. Do they move that up a little to take into account the sense that the long-term real rate is going to be higher?
And of course, in the middle of all this, Raghuram, is this idea that the U.S. economy has defied expectations that it would slow down. It's been remarkably resilient, and the job market, which is showing signs of cooling, still continues to add jobs and defy economists' estimates. Why is the U.S. economy outperforming everyone's expectations?
Well, there's a bunch of things going on, right? So one, of course, is we've had a fantastic boost to supply from the immigration that's been happening over the last couple of years post-COVID. We've also had, in a sense, some productivity growth, but we've got spectacular balance sheets, both on the household side as well as on the corporate side. And finally, the U.S. had a much larger fiscal boost than, for example, Europe had. So in that sense, all these things are coming together to create a stronger economy. So even while Europe has started cutting rates because to some extent it hasn't had the same kind of boost, in the US, you still find households are confident, they are spending. Many people, anybody who really wants a job has a job at this point and is confidently spending. So yes, the signs of slowing are at the margin, and they are there. We've seen, for example, job openings come down. But at this point, they're not enough for the Fed to feel confident. It wants to see either a slowing in the economy or a slowing in inflation from current levels, and it's not seeing either.
All right, Raj, I want to get your thoughts here, too, not just on what's going on in the U.S., but what's going on over in India. Obviously, you were on the central bank there. And we talk about, and you've obviously written some great books here, including Breaking the Mold, about how India can move forward. We just had a really pivotal election, pretty big pivotal decision on monetary policy. Where is the Indian economy going right now, in your perspective?
It's actually in a very interesting state because this election was a good one for India. It reestablished to some extent the move towards a more democratic India, which I think in the long run is good. But India has some important choices to make. Does it follow China to try and become a manufacturing giant? In my personal view, I think that's a mistake because the world doesn't have room for another China-like manufacturing giant. There simply is no place, both in terms of the growing protectionism across the world, but also in terms of sustainability. We can't consume so much in terms of manufactured goods. Yeah. But India has another option, which is services. And you're seeing some of that happen. Service exports from India are taking off, and maybe India should focus on that.
All right. You can read all about it in his book. Got to leave it there. Raj, Breaking the Mold, India's Untraveled Path to Prosperity. Raghuram Rajan over at the University of Chicago. We do want to get back to that other breaking news involving Elon Musk and his tweets on the platform X that he would ban Apple devices if they integrate OpenAI at the operating system level. Jackie Davalos, who's out there in Cupertino, California, you listened in to this Apple event today, Jackie, here. What is exactly Elon talking about? Is this what Apple's doing?
Elon has certainly wasted no time to enter the chat, as they say, not long after the announcement. Now, if there's one thing that Apple really emphasized today was privacy. It mentioned this on a few fronts. With regards to his partnership with OpenAI, Apple said that nothing that user data input when it comes to, for example, asking a question to Siri is then able to actually pull that query from ChatGPT. ChatGPT can also be used to compose texts or emails, for example. But it emphasized that users will not have their data shipped off to OpenAI unless they actually say that that's what they want to do. It emphasized user control here. Now, also, when it comes to privacy, when it comes to running these models on the device and on the cloud, this is something that they're not wavering on. Privacy is their ethos, and clearly they're not backing down as it relates to their AI strategy either.
All right, Jackie Davalos out there at Cupertino, California, on the heels of that Worldwide Developer Conference by Apple. Scarlett Fu, of course, a conference that didn't necessarily move the stock, or it moved it just in the wrong direction here, but it put AI back in focus.
Yeah, and it has people curious about how Apple is going to make AI more accessible to users who might be a little skeptical about its use, its application.
Yeah, a lot going on today and a lot going on for the rest of the week. It was a busy show today. We got a lot more coming up tomorrow here on our brand new set, Scarlett.
Yeah, we'll be speaking with Nuveen CIO Sarah Malik, Cisco CEO Chuck Robbins, and the Blue Owl Capital co-CEO.
Yeah, we're also going to have the former governor of Massachusetts, Deval Patrick, on, as well as Rajiv Jain over at GDQ Partners. We continue all our coverage right here on The Close on Bloomberg.